Thank you very much, Stuart, for those kind words, and thank you for the invitation to come back to Oilbarrel twice in a row. And I'm sure some of you probably saw my colleague Tom Hickey, who's in the audience, who was here talking about Petroceltic's business a few months ago. You see on the photograph in front of you, on the top row, some photographs from the Petroceltic portfolio, and on the bottom row, some photographs from the Melrose portfolio. And today, I hope to explain to you why we think this is a great combination, and why the combination of these two companies makes a sum greater than the sum of the parts. The previous speaker mentioned oil seeps, just to point out that the photograph on the top right-hand side there is an oil seep. It isn't lava, that's actually oil on a block in Kurdistan, just a few kilometres from one of our drill sites in Kurdistan, which is seeping out from the surface. We'll skip over that. As you probably know, last month we announced the agreed merger of Petroceltic and Melrose. The objective of this really was to bring together these two companies and create something better from the sum of the parts. The regional focus of the two companies was already in a sort of circum-Mediterranean region, Middle East, North Africa and Black Sea on the Melrose side. We ourselves, of course, were also active in Southern Europe on the Italian side, so it was a very good regional fit. The combination of the two have reserves of about 84 million barrels on combination. We expect to see the bulk of our contingent resources in Algeria, the 357 million BOE that you see there, coming into the combined entity before year-end. We hope to book the Algerian reserves, which is about 300 of that 357 million target. So there'll be a very, very large reserve position in the combined company once we book those reserves in Algeria. And then above and beyond that, there's a huge potential upside in the combined exploration portfolio of the two companies, which will be aiming to translate some of that into reserves over the coming years. All the production in the combined entity is coming from Melrose, just under 30,000 barrels oil equivalent per day. The bulk of that from Egypt and some of it from Bulgaria. From the Petroceltic side of the portfolio, we'll be adding production in Algeria, but that doesn't come through until 2017. Above and beyond that, over the next 18 months, there are 6 high-impact wells over 5 assets, including the very high-impact Shackrock prospect, which I'll talk about a bit more later in the presentation in Kurdistan. As part of this transaction, there was a slightly unusual aspect to it in that Melrose had a bank facility from 9 banks, which required to be replaced on the change of control. And we were able to put in place a $300 million bridge facility effectively from HSBC, which would allow us to take out that Melrose facility on the change of control. That in itself will be replaced over the coming 12 to 18 months with a more conventional reserve-based lending facility. We think that the two teams make a great combination, and I'll tell you a bit more about that as we go through. I guess, in a nutshell, you could say that the Petroceltic team was more exploration and business development focused. The Melrose team, while also doing exploration and business development, were probably more production, petroleum engineering and development execution focused. And obviously the combination of those two skill sets makes for a very robust company. And we aim to relist the combined on the main market in London within a year. We think this will be a must-hold equity for the region, and this regional focus creates a platform for future growth. We would aim to go out and expand the portfolio in our area of focus. Just looking at the Melrose and Petroceltic pre-merger. Petroceltic, obviously familiar to most of you, we were listed on the AIM and the ESM exchange in Ireland. Market capitalisation of just under £200 million on the day of the announcement, and obviously assets in Algeria principally, but also exploration assets in Italy and Kurdistan. Melrose, market capitalisation of £157 million, listed on the main board in London, producing assets in Egypt and Bulgaria, and with exploration in Egypt, Bulgaria, and additionally in Romania. The combined deal that we did post the merger, and the merger will be voted by both sets of shareholders next week on the 20th of September. We expect it to go through. Petroceltic's shareholders will end up with 54% of the combined. The Melrose shareholders will have 46% of the combined. And the new entity will continue with the Petroceltic name, and as I say, we hope to have it relisted on the main board in the not too far distant future. The pro forma combination will be a company of a market cap of more than $500 million. We think we'll be able, with a bit of aggressive marketing and the addition of some new business to the portfolio, to improve on that and get it up a bit. And we would expect the new company to be a FTSE 250 company in the not too far distant future. Even at that pro forma combination, it's just below the FTSE 250 cutoff. This will be a significant E&P company focused on Middle East, North Africa and the Black Sea, and in effect a new regional entity for the LSE. One aspect of the deal which was agreed with the Melrose shareholders was that there would be a one-of unique special dividend for the Melrose shareholders of 4.7 pence before the deal completes. And this is largely because Melrose themselves in the past paid a dividend every year, roughly of about $10 million. We will discontinue that practice, but as a part of the discussion with Melrose, it was agreed there would be a one-off special dividend to bridge the gap, if you like, between what we intend to do post-merger and what was Melrose's practice pre-merger. The transaction is actually structured as an acquisition, so we bid for and take over Melrose with new Petroceltic shares. And I think I've also discussed the HSBC facility. Just looking at the combined shareholding, the Petroceltic shareholders end up at 54%. The other Melrose shareholders are 22.6%. Any of you who've ever looked at Melrose will know that Melrose was predominantly owned by an individual, Robert Adair, who controlled the company directly and through his family trust, Sky Investments. That group ends up as the largest shareholder in the new co at 23.4%. And Robert Adair, in fact, will become the non-executive chairman of the new co. And he'll continue in that position for at least 18 months. We also have the normal relationship agreement with Robert in that he has to vote that equity with all normal resolutions of the board. His shares are effectively locked in for 18 months, and we have orderly market provisions thereafter. Just looking at the combined team, if you like, we've talked about Robert. Stuart was very kind to introduce my background. I guess the other two executive directors in the new team are both in the room. Dave Thomas, who I'm sure some of you know, the chief executive of Melrose, has got a very long career in the industry and in this region. He was country manager Pakistan for LASMO. He was the COO of LASMO at one point, and has a long experience of dealing with Algeria and Egypt and this region in general. Following his time at LASMO, he moved to Eni, where he was also responsible for Middle East, North Africa and Africa and Europe generally in Eni. And then thereafter, he was the COO of Centurion, which, as you know, had a large business in Egypt, which was sold very successfully to Danagas a few years ago. Tom Hickey, my old colleague from Tullow, is also here in the room, and he will become the CFO of the new entity. Tom has a very long career with Tullow, very successfully ran Tullow in the financial side from 2000 to 2010, where he executed a number of transactions, the Energy Africa transaction and the Hardman transaction, and is well known to many of the lending banks whom we hope to see in our new banking facility, which will replace the $300 million bridge from HSBC. The combined board, above and beyond that, is made up pretty well equally on non-execs from the Melrose and the Petroceltic side. Hugh McCutcheon, Rob Arnott and Colin Casey from the Petroceltic board, all very experienced. And James Agnew, who's the chairman of UK Broking at Deutsche Bank, and Alan Parsley, former head of Shell International from the Melrose side. So I think you'll see that the board, both in the executive and the non-exec side, is a pretty powerful team of people, and we're very happy with the makeup of the board and the corporate governance aspect, if you like, of the new co going forward. Both companies had Pelham as PR advisor. Both companies had KPMG as auditors. So there's a lot of synergy there, and we will expect to continue with those. Let's look at the combined business. As I mentioned, Melrose had 84 million barrels equivalent. The bulk of that was in Egypt. There's a portion in Bulgaria. Most of that reserve is gas. About 15% is oil and natural gas liquids, and that's all in Egypt. The portfolio is, as you know, Egyptian gas is sold on a controlled price, so domestic gas gets about $2.95 per BOE, per MCF rather, when it's sold into the domestic market. So one aspect of that is that the Melrose cash flow is relatively robust, irrespective of oil price, because that gas price is the same at any oil price above $30. So that provides quite a bit of robustness in the cash flow from the combined entity. We are looking at high-impact exploration in Kurdistan, in Italy, in Romania, in Egypt. And as you know from the Petroceltic portfolio, we had hoped to do some exploration in Egypt, which was kind of put on hold for a while because of the ban on drilling following Macondo in the offshore. The new post-Berlusconi government is very much on a course to open that up again, and we would expect to get back to drilling not only onshore in the Po Valley but offshore in the Adriatic over the coming 12 to 18 months. The cash flows from Bulgaria and Egypt are more than adequate to fund all the exploration programme for the combined entity, particularly now that we will discontinue the Melrose $10 million per annum dividend. And we would expect to grow the portfolio above and beyond that, and we will be looking at new ventures, particularly in the high-impact exploration side. This slide really explains the deal in a nutshell, and I think it summarises why the deal is attractive for both sets of shareholders. The production you see from 2012 out to 2016 is from the Melrose portfolio. So that's predominantly Egypt with a sliver of Bulgaria production on top there. The Bulgarian production being very important because the Bulgarian gas price is significantly higher than the Egyptian gas price. What you see layered in from 2017 is basically the Ancilla gas field coming on in Algeria. As you probably know and will remember from Tom Hickey's presentation a month ago, we just recently got the declaration of commerciality in Algeria, and we also agreed to sell all of our gas to Sonatrach at a very favourable gas price linked to oil prices in Europe. So that Algerian asset is well underway. I guess previously we had always talked about reducing the asset, doing a second farm out in the asset and maybe doing further farm outs. We would continue to plan to farm the asset out, so our current equity position in Algeria is 56%. We still plan to do a second farm out and reduce it to 38%. But this transaction, when it goes through, will give us the financial strength to stay in as operator at 38% and take the project through to first gas, and that's our plan, which we hope to do now. The colours, the bars that you see there on the graph, the hash is basically representing Petroceltic at 56%, and the solid line, it will be our production position when we reduce to 38% following the second farm out. We are pretty far advanced with second farm out. We're deep in discussions with potential farminees, but because of the nature of the process in Algeria and just the way the approvals work, it will be unlikely for us to actually announce who that is and what the deal is until sometime second quarter next year at the earliest. There's quite a long process of getting Sonatrach and Algerian approval before we can actually publicise the terms of that deal, so that information will be coming out sometime next year. We've talked about the reserves, we've talked about the production. We hope to book the Algerian reserves before year end. We've basically got the gas sales in place, we've got the plan of development in place. All that we're waiting for now is an approval from the Algerian regulator, which is due before year end, and that is effectively a rubber stamp of the Sonatrach approval, which we already have. When we have that, we can book the reserve and move into our 30-year development period in Algeria. The Algerian asset is a fantastic asset. When it gets into production, the plateau lasts for 14 years. So it has a very, very solid cash flow and it's a great foundation asset for continuing to build the company on and moving it on forward. In a way, one of the key aspects of this deal, which was very attractive to the Petroceltic shareholders coming into the deal, is that the Melrose existing facility, the net debt facility which they have in place, which I think was at their interim's announcement recently was about $260 million. That is only secured on their production out to 2014, so the first three bars of the graph that you see there. The production, the quite substantial production beyond 2014 on the graph, was not leveraged or not involved in their bank facility. And by bringing that into the new facility, combined with some of the reserves that we're going to book at year end, we're going to create significant additional banking headroom in the new facility. And that headroom is what's going to allow us to stay in Algeria at a much more significant equity than we otherwise could have done. So that's a very major benefit for our shareholders as well. We've talked about the exploration upside in Italy, Kurdistan, in Bulgaria and Romania. I'll move on to that. In Italy, offshore in the Adriatic, we have a discovery, the Elsa discovery, which was made by Eni in 1992. When they found that well, they actually found a 65-metre oil column in the well, which was never properly tested. At the time, the oil price was about $12, and it was perceived this was heavy oil, which would have an $8 price, and Eni basically walked away from the prospect. We now believe that there's P50, something like 52 million barrels oil equivalent in that ELSA discovery, with an upside of up to 170 million barrels, depending on the specific gravity of the oil. We would hope to go back, test that well, very similar to what Providence did in Ballyroe, go back and test an old well using modern techniques and using ESP pumps and better technology than was available when the well was originally drilled. If that pans out, we would look to go into a shallow water development. We expect to get back to that well sometime in the second half of next year, provided we can get the necessary permits, which we're already engaged with the Italian authorities. Above and beyond that prospect, there's a lot of other prospectivity in the offshore in Abruzzo, some of which has recently been awarded to us, and the other blocks there that you see in grey, we expect to have those awarded in the near future. And there's quite a bit of follow-on prospectivity from ELSA. What's nice about the combination with Melrose is that the Melrose technical team have already done this basically. Their development in Bulgaria is a shallow water platform with subsea tiebacks. It's exactly the same technology that we would aim to use in Italy, in the same way that their onshore development in Egypt, both the wells that they drill onshore, but also the gas processing and the LPG extraction that they do onshore, is exactly what we're going to be doing in Algeria, just on a slightly larger scale. So there's a very nice synergy in terms of the skill set of the staff between the two businesses. Turning to Kurdistan, as you probably remember, we got into Kurdistan last year. We picked up 2 blocks. We're 16% in the blocks. The operator Hess is 64%, and the KRG has a carried interest. As part of our admission document for this transaction, we published a very thick competent persons report on our Kurdistani interests, and in there you can see, if you take the trouble to look on our website, these are very, very large prospects. They are P50, 500 to 700 million barrel prospects with upsides in excess of 1 billion barrels. So very significant prospects. We've acquired all the seismic on the first of those. It's pretty well finished now on the Shakrok block, and we're moving on to the Norte block. And we expect to be drilling there sometime around beginning of Q3 next year. A very significant event for the new company. In Romania, which as you probably know is becoming a bit of a hot area, Exxon have just made a multi-TCF discovery in the deep water, and Total and Repsol and OMV have just paid a lot of money for a deep water block offshore Bulgaria adjacent here. Exxon and Shell have been bidding in deep water north of the boundary in Ukraine, so this is very much becoming a hot area. Melrose had 2 blocks which they picked up about a year ago, where they are now 40% an operator of both those blocks, and they've just completed a large 3D seismic survey there. There are multiple prospects coming through in those blocks, and we expect to have a 5-well drilling commitment on the blocks over the coming years, with the first 2 wells coming up towards the back end of 2014. The Romanian gas market is liberalising. It will be the same as the Bulgarian gas market in the not too far distant future, we hope, and will attract European-style gas prices with relatively low tax takes. So this is a very, very exciting part of the combined portfolio. Just looking at news flow, one of the things that Petroceltic used to be criticised for in the past by our shareholders was not having enough news flow, and you know, we'd have very exciting drilling results in Algeria, and then nothing would happen for a while. I think you'll see in the combined entity we're going to have a lot more news flow and a lot more reasons to hold the stock, as it were. The first of these wells is a very interesting wildcat well, which Melrose is drilling to the south of Egypt in a block which is twice the size of Wales, the Masaha block, up against the border with Sudan. That is truly a wildcat. It's 400 kilometres from the nearest well. It's drilling on 2D seismic. Melrose have got Hellenic, Kuwait Energy and Beach Petroleum from Australia as partners in the block. And, you know, it's a high-risk well. It may come in, it may not come in. I think it's fair to say that it's unlikely to come in, but it may open up a new play, provided we see the play elements working and some sign of hydrocarbons in the basin. If it does come in, it could be very, very exciting. It's a huge area. But I guess we're not gambling the farm on that one. Following on from that, Melrose have a number of near-field step-out wells, relatively small prospects adjacent to their existing gas and oil facilities. But the nice thing about these is they may be 5 to 10 million barrels, or, you know, sort of 5 to 30 BCF gas prospects. But when they come in, they can be put on stream straight away, and they extend the production portfolio and they extend the profile, and are very cash generative in short order. In Bulgaria, there's a 25 BCF gas prospect adjacent to the existing Melrose discoveries and production. Likewise, that can be put on stream within a year and could add 2 or 3 years to the production profile in Bulgaria just on its own. And there's a whole slew of other follow-on prospects from that one. Romania, we've talked about 2 very exciting wells coming up next year. We're still in the process of selecting the targets for those, but we would expect those to be drilling towards the second half and third quarter of next year. In Algeria, I discussed earlier, we're just going through the declaration of commerciality process. We'll be going into FEED and setting up the joint body with Sonatrach to execute that project. We don't expect to be spending serious cash and drilling again in Algeria. We'll probably start spending money in the second half of 2014 in terms of the development plan, but we won't be back to drilling again until 2015, and first gas is scheduled for the second half of 2017. Kurdistan, we've talked about. We've got a well next year and another well the following year, and we would like to grow our business in Kurdistan, and we'll be looking to add new assets if we can. And in Italy, we have a well in the Po Valley with Eni, which is a very interesting high-impact well, 250 million barrel prospect adjacent to existing production, could be tied back quite easily. The existing production facilities were sized to deal with 90,000 barrels a day and are currently doing less than 5,000 barrels a day. So there's capacity there to develop that very quickly if it comes in. So I hope you'll agree, a very exciting portfolio of high-impact exploration to add above and beyond the production. Just in terms of the management team, Dave and Tom are in the room. We've got a very experienced team below the executive level. Diane Fraser, who was the finance director of Melrose, has been with Melrose for a very long time. Excellent accountant and very strong banking relationships, and will continue with the combined business. Jeff Probert, who runs our Algerian business, is going to take over running both Algeria and Egypt for the combined entity. And Jeff was responsible for the BHP Billiton's own development in Algeria, a very competent gentleman. David Archer, who did all the business development and execution work for Melrose in the Black Sea, in Bulgaria and Romania, will also continue with the combined entity and be responsible for that business. John Naismith, who is their Melrose's Chief Petroleum Engineer, will continue in that role effectively for the new co. An excellent engineer whom I know from the past. I worked with him in Shell, in Enterprise in Tullow, so I know him man and boy, as it were. And Dermot Corcoran, who works with us, is going to be the head of exploration for the new business. He's an Exxon-trained geophysicist and has had a long and successful career. So we've got a very good team in the combined entity. I think I mentioned the synergies between the two groups. Petroceltic, left to its own devices, would have had to go out and recruit a bunch of petroleum engineers and development people to develop our assets in Algeria and also in Italy if we're successful in the appraisal. With the advent of the Melrose team, we expect to layer them into our business, and we won't have to recruit. From a cultural point of view, we get on with the Melrose people very well. We spent a lot of time looking at each other's assets, and we got comfortable with each other during that period. And we would expect that both offices, the Petroceltic office, which is largely in Dublin and is focused on exploration and new ventures, will continue. But the petroleum engineering and the execution side of the business, operational side of the business, will be based in Edinburgh and will continue under the tutelage and under Dave Thomas, who will continue as CEO of the combined entity. Just in terms of cash flow, Melrose, as you can see, was throwing off a lot of cash for the last 3 years and is a very cash-generative business, and we would expect that to continue at least for the coming year or two. Melrose has been very successful in paying down debt over the previous years. Last year they paid down $100 million of debt. This year, in the first half, they paid down $60 million of debt. So there's quite a cash-generative business here, which is throwing off enough cash not only to run the exploration program and to do the developments that we've talked about, but also creating a bit of headroom for doing new business and new ventures. I think because Melrose in the past has been very much a debt-focused company, they have operated very efficiently, and they're a very low-cost operator. And in fact, I think if you look at the LSE-listed companies, they're one of the lowest-cost operators on the LSE, and we would hope that would continue. They've been very successful as a low-cost operator in both of their areas of operation, and we hope to bring that skill set to bear on our operations in Algeria as well. As I mentioned, the 9-bank facility, which was in the Melrose lending facility, will be taken out by this HSBC bridge finance. We intend to replace that with a new facility covering all of our assets, including some of the reserves we're bringing in Algeria. And we've already been approached by, I would say, 9 or 10 banks interested in getting into this facility and looking at this space. So I'm sure we'll be able to do a reasonable deal on that. The combined entity has pretty good options for future funding. I mean, Melrose, by the nature of their business, were 100% in most of their developments. They're 100% in all of their acreage in Egypt and 100% in Bulgaria. That in itself creates the potential for portfolio management if it becomes necessary. In Ancilla, we've already announced that we're planning to farm out and to reduce our equity to 38%. And that farm out will be focused on getting development carry. So the consideration for the farm out will largely come in the form of carry for the very large capex bill which we're going to face to get that substantial 2 TCF, 180 million barrel development into production. The resource base is there to support a very large reserve-based lending facility to help contribute not only to the development of the assets that we have in the portfolio, but also a large chunk to go into the early days of the Algerian development. And I think the larger size and the diversification in the combined portfolio opens up the possibility that we'll go to other pools of capital. So we're going to relist the combined entity on the main board. If we have success in Italy or in Kurdistan, the relisting on the main board and hopefully participation in the FTSE 250 will give us access to investors that neither company could have accessed on their own. But we also, with the very long profile that we have in Algeria, have the potential to look at high yield debt as well down the line, maybe when we're a bit closer to the early cash flows in Algeria. So there's a number of ways in which we can fund this business going forward. I'll wrap it up there. I mean, the rationale for our shareholders, and I'm speaking still as the Petroceltic shareholders, this transforms Petroceltic's business from a portfolio which was largely focused on a single asset to a diversified, enlarged, but still regionally focused company. It adds a lot of cash generation production to our business. It gives us a platform from which we can do much more effective business development in the area. I mean, between being the operator of a major development in Algeria, being the operator of significant cash flow in Egypt and Bulgaria, that puts us in a much better position to go and negotiate with host governments in the region to look for new business and gives us a better... We're able to more successfully punch above our weight, which is what companies of our size have to do to make progress in this business. Obviously, the cash flow gives us greater financial flexibility and it gives us the possibility to pursue a wider and more active exploration portfolio. And we would expect to continue to grow the business, and we are, obviously, the short-term objective for us is to bed down the combined entity and to take the two companies together and to do the integration. But 6 months, 9 months, a year out, we'll be looking for new business and for new growth opportunities in the area. We think this company, as a regionally focused company, will be, as I say, a must-hold for the region. We aim to market it very, very aggressively, and we hope to bring new investors into the company. The transaction doesn't require us to raise any new equity. With our own cash position, which was $55 million at mid-year, we were adequately funded through to the end of 2013. Melrose is in the same position. They were paying down debt, and they've got significant cash flow. We would expect that we can run this business with the combined entity without having to come to the market for more equity, absent a significant exploration success, which requires funding going out for the next 18, 24 months. We've got a very solid financial foundation to build new business. We've got a very experienced team between the two companies, and we think that we're going to go out and win new business and grow it. So that's the timetable. The main votes are on the 20th of September next month, and we hope to have the new shares admitted on the AIM and ESM on the 11th of October, and we would expect to see that new company, or rather that enlarged Petroceltic, listed on the main board sometime within the next 12 months thereafter. That's all I have. Thank you very much.
Thank you, Brian. Any questions, please? Right, just here.
Was there a reason why you didn't structure the merger so that you could actually keep a main market listing that Melrose had? Was that a consideration?
We could have structured the merger so that we offered for Melrose and then went immediately onto the main board. But because this transaction was already fairly complex, I mean, it's quite unusual to have a borrowing-based facility pledged on the assets of the company which you're acquiring being used to take out the existing facility and roll into a bridge for the transaction. That in itself was quite complex. And given the complexities of that, we didn't want to add the additional layer of having to relist the combined immediately on the main board. So when we discussed it through with our shareholders, they were happy that, provided we gave an undertaking, that we were going to do that within a year, that would be good enough, basically. So, for example, some of Melrose's existing shareholders are traditionally not able to hold AIM equities, and if we were to continue on AIM indefinitely, they would probably have to have exited. But they've accepted the undertaking that we'll be back on the main board within a year, and they will continue to hold. So, given that flexibility, we didn't see the need to go instantly to the main board.
Further questions?
I presume you're putting these two companies together because you're thinking that 1 and 1 is going to equal more than 2. How much are you going to save on overhead costs a year?
There will be some savings, but they're pretty modest, to be honest. I mean, the two companies, neither company operated in a country where the other company already was. Petroceltic on its own had actually made some non-operated license applications in Egypt, which are still out there, and we may be granted a license in Egypt in the near future, but that was non-operated, and the scope for saving is small. We don't plan to fire anybody or to reduce the staff. In fact, we plan to grow staff. So there's little scope for overhead reduction there. There will be some cost savings, obviously. We'll have a single board, we'll have a single listing, so the corporate costs associated with having a listing and having auditors and all of that will be reduced. But to be honest, it's not a synergy-driven deal. It's more, the synergies are in the operational synergies in terms of us not having to go out and recruit a development team because Melrose already have people who are perfectly capable of implementing our development in Algeria. So implicitly, I guess, there's a cost saving there because we're not going to have to add to our overhead to do that because those people are already in Melrose, and that activity will become capitalised into the Algerian asset and therefore not part of the overhead, whereas left to its own devices, that was part of Melrose's corporate overhead. So there is a cost saving running out, but it's not the main driver for the deal.
Further questions? Me?
I'm not sure if I heard this correctly, but did I understand you to say that you're now planning to remain as operator during the development phase, first gas and then Scylla?
Yes, we are.
And that's not what you were planning before. I was just wondering what the thinking was.
It's funny, when I was getting ready to come here, I looked at the webcast on Stuart's website of what Tom Hickey said the last time to make sure that I didn't contradict anything he said. And one of the things he said when he was talking about Algeria was that we would not be the natural operator of something of that scale, and we would aspire in the second format to bring in another operator. And that had always been our thinking until this point. Having done this deal and having doubled the size of the company basically and access the technical expertise that is within Melrose, we think between the financial capacity in the combined entity and the technical capacity in the combined entity, we can operate the development in Algeria, and that's what we aim to do.
Yes, just here. 2.
Can you benchmark actually your Kurdistan property versus other operators in the region, please?
If you mean benchmark in terms of value, I can give you an idea. I mean, we have 2 blocks. Shackrock is about 420 square kilometres, and Dinarte is 1,200 square kilometres, something like that. Shackrock has 2 large prospects on it. Dinarte has 3 large anticlines on it. Most Kurdistan blocks, as you probably know, just have 1 structure per block. That was the way the ministry divided them up, but for whatever reason, our blocks are slightly larger. There's a block just to the south of us, about 20 kilometres to the south of us in Kurdistan called Binabawi, and that has 1 well discovery on it drilled by OMV. That block, 6 months ago, 23% of it, I think, sold for $175 million to Genel. And a few weeks ago, a 21% interest sold for $250 million to Genel. Now, it's not a development, but there is a discovery there. So that gives you an idea of the potential value, if you like, of that block. That block is about half the size of the block that we're drilling just to the north of it. So as I say, that block is, I think it's 220 square kilometres, ours is 420. So that gives you a quantum of what it could be worth if the wells were successful.
Just want to find out if you're comfortable with the political developments in Kurdistan. You know, the Kurdish government and the ICG don't get along well, and I think the ICG actually hold, the power regarding oil exports and stuff like that there. So do you have sleepless nights when you have to think about things like that? Do you sleep comfortably, knowing that kind of problem exists?
Thank you for your question. We never have sleepless nights. We've always been confident in the ability of the KRG and Dr. Ashley and the Prime Minister there to deliver their business. I guess we were probably the last small company in Kurdistan. The day that we announced our deal, Repsol also announced the deal, Afrin announced the deal, and Maersk announced the deal 1 week later. Since we've announced our entry into Kurdistan, Total, Exxon, Gazprom and Chevron have gone in, and Statoil and various others are rumoured to be hanging around. So something like 5 of the world's 10 largest oil companies are now invested in Kurdistan. Sinopec are also there via their acquisition of Adax. So I guess if Exxon and Total and Chevron are comfortable making investments in Kurdistan, they are much closer to production than we are. We're in the exploration realm. They're already in the realm of developments. I think we should be comfortable that one way or another this oil is going to be monetized. It will either be monetized via an agreement with Baghdad and sold through SOMO, or Dr. Ashley and the rest of the KRG are making no secret of their negotiations with the Turks and the fact that one way or another they intend to monetize their oil. It will get to market, and I'm pretty sure that will happen. We don't worry about political risk in Kurdistan.
Any more questions? No? Well, thank you very much, Brian.
Thanks very much, Chip. Thank you.